In today's video, we'll be going over Unit 3.2, Sources of Finance. Sources of finance can be divided into internal and external. Starting off with the internal. Internal sources of finance come from within the organization without the help of a third party. There's three of them, and that is personal funds, retained profit, and sale of assets. We'll be going over positive and negatives for each source of finance. Starting off with personal funds, its positives are that it doesn't need to be repaid to anyone, you have no interest that you must pay, and it's the cheapest source of finance out of all of them. Its negatives, however, is its high risks, as you're obviously putting your own life savings into the business, and it's rarely sufficient to actually fund your projects. The second source of finance is retained profit, which is using your financial surplus. Its positives are that you still don't pay interest, you don't have to repay it to anyone. However, and it's very flexible. However, its negatives is that obviously you can't use it when you first start. It's also rarely sufficient to properly fund a new project. And you get less dividends to give to your shareholders, which obviously can cause some conflict at times. Thirdly, we have sale of assets. The advantages of this is that you can raise large sums of money by selling, obviously, assets that are worth a lot. You can, if you sell redundant assets, then it's definitely a positive because it helps get rid of storage and you make money off of something that you don't even use. And it doesn't cost you anything, you don't have to repay it once again. However, its negatives are that sometimes you can sell certain assets which might hinder productivity and profitability, and it can be actually time consuming to sell an asset. It takes time to find a good buyer at a good price. Now, let's go on to external sources of finance. These come from outside of the organization and are usually done with the help of a third party. The first of this is share capital, which is all the finance raised through the issuing of shares via the stock exchange. The advantages of this type of source of finance is that it also doesn't need to be repaid and you're paying no interest fees, and you can raise high amounts of money, obviously all depending on your company's worth and the demand. Disadvantage of it, however, is that shareholders that are buying into the company then need to be paid dividends afterwards, and you're obviously losing ownership and control of the company, which is being diluted to the people you're selling these shares to. Then we have loan capital. Loan capital is when you borrow funds from financiers. Obviously, the most usual financer is a bank. Its advantages are that it enables you to pay in installments, which makes it more affordable and helps you with liquidity problems. Large companies obviously benefit from economies of scale as they can get low interest rates, and you can raise huge amounts of finance. The disadvantages, of course, are that you have to pay interest on it. And if you fail to pay these installments, then it can lead to the seizing of certain assets. After that, we have overdrafts. Overdrafts are a banking service that allows you to withdraw more money than exists in the account for an extremely short period of time. The advantage is that it's very easy to obtain and they're good emergency funds. However, you should only do this one time, as the disadvantages is that you're paying a huge interest rate. It's only suitable for small sums of money because you don't want to do this with large sums. Banks can ask for the payment back at any point. And obviously, it's the riskiest type of source of finance. Another external source of finance is trade credit, which is when you purchase the goods and you obtain them, however, you pay for them at a later date. The advantages of this, of course, are that it helps you if you're struggling for cash flow, and you're not usually paying interest on these goods as long as you stick to the trade credit terms. However, its disadvantages is that it might hinder your relationship with suppliers, and you might not be getting kind of deals and discounts because of that. And if it's not paid within the credit period given, it can cause legal issues, and eventually you might have to pay even more than what you set out for. Additionally, we have 4 more external sources of finance, which are crowdfunding, which is raising small amounts of money from a large number of people to fund usually a specific project, which most of the time is for the greater good of society. Its advantages are that obviously it's essentially cost-free, and its disadvantages are that it's legally challenging, as you have to have full disclosure with where this money is going to. You might have theft of intellectual property, because sometimes this is actually done with, let's say someone has an idea and they want to create a startup. They put the idea out there, they look at who's interested to buy it or whatever it may be, and those people put the money in to fund this project. And your public image may be damaged if you're not doing well with this money that you're getting in, because obviously it's donation based. After that, we have leasing, which is renting out a non-current asset. So let's say you're leasing a car or land or whatever it may be. And the advantages of this is that it can be cheaper for short-term wise. Obviously, long-term, it's definitely more expensive. And you have less responsibility for its maintenance. Usually the owner is the person that does the maintenance. If you're simply leasing it, you do not need to take care of that. Whereas the disadvantages are that, once again, long term it's more expensive and you don't actually own the asset. So once you're done using it, you're not going to be able to sell it off for cash and liquidity. Then we have microfinancers. These are for-profit social enterprises who offer finance to the less privileged, who wouldn't normally secure bank loans. So essentially, it's lending money to small firms who are very much struggling. The disadvantages are that you're helping people out of poverty, which gives you a good corporate image if you're one of them, and you're helping small businesses succeed for the better of the economy. However, its disadvantages are that if you're one of these less privileged companies, you're definitely getting small amounts of money, and you still have to pay interest on that. It's not a free service. Lastly, we have business angels. These are wealthy individuals who invest into equity of the business of businesses usually with high growth potential. So therefore, they're essentially buying shares of the company. However, it's large ones. And oftentimes they get a say in the business decisions. The advantages are these are great for startups because you're also getting experience and expertise along with their involvement. And disadvantages, however, is that you're obviously diluting control and ownership, and it's very difficult to come by. Most of the time, it's very hard to find these wealthy individuals that are so open to doing such operations. These are all the sources of finance.